W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the Road Options Training Program. And what we're going to go into is Market Mondays for 7/12/2021. What we do on Market Mondays is we try to give you a really quick, concise breakdown of the markets. We're not necessarily here to keep you here long. We want to try to give you a basic understanding and start understanding how you can utilize the markets to be beneficial in your life and to help you get what you want to get out of life. So what we want to ask you first is for you to like the video and to share the video out to your particular network of YouTube or your social media if you know somebody that you think can get value from it. And then I would ask you, if you don't know anybody in your network that can get value from this type of content, you may want to start to reconsider your network, right? So you may want to start to consider what kind of people that I have around me if I'm interested in the markets, but nobody else is. So if you don't have anybody to share it out, you may want to start asking yourself how you can get connected to people that would be able to give you some feedback on market-based information. Let's go ahead and get into it. So S&P 500 was up 0.35. The Dow was up 0.36. The NASDAQ was up 0.21. The markets pretty much kind of started off a little sluggish and kind of turned green. We talked about July being a seasonality of the market being up. We got the 10-year treasury at around 1.38. It's still relatively low. We're going into earnings season. And will the market take off with good responses to earnings? So we're getting ready to go into a season of earnings. We want to find out if we get really, really good earnings, will the market take off and will it start to become bullish? Now, what we're going to talk about is our jump out. So what we're going to talk about is the companies that did well or didn't do well and kind of give you some context to them. So Virgin Galactic holding space. They had like I don't know what you call it, a flight over the weekend. It went well. Everybody came home safe. To me, that was the most important part. However, this morning when we woke up, they said they were going to do like a $500 million offering, which means that they're going to sell a lot of shares. They didn't say what particular price point they were going to do it at, or maybe I didn't catch it. Once that news came out, the particular share price started to sell off. And we're going to go into that later why this happens. So they were down around 17% from the open. And we still got the chart dip really hard. You see there's a lot of times with bearish charts where you get a really hard sell off early. So you see it selling off really, really hard, probably before even 10:30. Looked to recover a little bit, and then it started to slide all the way back down. So it got, I think, almost under 40, 42, under 40 at one time, and then kind of recovered. But they lost almost 20% on the day. Now look at AMC, right? So AMC has been trending down lately. They had a decent release. They tried to kind of hype up the numbers, but the numbers were really not comparable to 2019. They were better than 2020, but we know we were in COVID during 2020. So pretty much any numbers are going to beat that. It sold off at around 7% today. What we're looking at is that this is the type of deal with these meme stocks. They need new money, right? All marketplaces need new money for what? Liquidity. So when you have a lack of liquidity, either it's going to consolidate and start to trade sideways, or it's going to start to sell out as people start to leave because they realize that what I bought in is not going up. So if we can't get new money into this particular marketplace, we start still having issues with lack of liquidity. We're just going to hit an inflection point where it's going to start to sell off really rapidly as people become fatigued because they see that what they put in is not starting to appreciate. There's only so long they're going to be able to keep people emotionally in this play if they're not getting a result that they desire from being in the deal. Delta Airlines are doing earnings this week. What we want to kind of figure out is what is going to be their guidance? What are going to be their plans? They're a major airline, especially in the Southeast. How are they going to deal with this new particular environment? And so I'm going to be really interested to hear that, because if the market likes their guidance, I really think that Delta can probably be bullish for the next quarter. Now we want to talk about the topic of the day. So why offerings drop stock prices. So we take Virgin Galactic, right? They had a really good event this weekend. A lot of people anticipated them being bullish, and then it came out this Monday and said that they're going to do an offering. To me, the event was to show proof of concept, to show that we can actually do what we say that we're going to do, create a lot of good PR, and now we're able to bring new capital in. We're going to be able to probably find private investors who want to be in this particular deal. They're willing to give us some money. Now, we don't know what the offering price is. I'll be very interested. And I think that's one of the reasons why they sold off. I don't think the offering price was an at the money offering. So they probably sold off because people believe that their offering price is going to be lower than what the current share price is, which means that you are over what the current share price really is valued. Another reason why offerings drop stock prices is because you're going to dilute. So if we're doing a $500 million offering at a particular share price, we're adding those shares to the float now, which means that your equity is less in that particular deal. So now, based on how you forecast or project the future of this particular company, are you willing to deal with less equity in this deal? Right Now, offerings don't always drop stock prices. I've seen scenarios where people do an offering and the share price goes up, right? But a lot of times those are situations where you're dealing with a much smaller float. I think Space's float was around 150 million. A lot of times if you're dealing with a float that's well under 100, they may be able to do an offering, and there can be a demand on the shares because the news around the offering creates a bullish sentiment, right? So sometimes they can say we're doing an offering, and that offering in people's mind creates a bullish sentiment about that particular company, and people will buy in, right? In this scenario with Space, they said they're doing an offering. People believe that the offering is going to be under the current share price, and they look to get out of the deal. It can happen. So there isn't any hard and fast rule that's 100%. However, in most of the times that I've been observing the market, when you see an offering, it normally leads to a drop in the stock price. It may not be as immediate. It may not happen that same day, but normally over time, that particular share price will start to decline. It also depends on how long it takes them to do the offering. So a lot of times what they don't want to do is dump the price over one day. So what they can do sometimes is make the offering be kind of spread out. It all depends on how they do it. But in normal circumstances, an offering is going to drop the stock price. So if you as a trader, if you hear about an offering, you want to anticipate there being some downward pressure, some selling pressure on that particular stock, but it's not a guarantee. It could be bought into because of the offering, and the sell-off could be very short. So you may get a one-day sell-off, and then that particular thing starts to rebound the next day, right? Even though now we got a larger float, people are more willing to come in now at that new lower price. So yes, it's sold off from the higher price, but now people are willing to come in at that particular lower price. So it's really something that you would want to observe. So next time that you hear that a company is having an offering, try to get an understanding of how large the offering is going to be. See if you can try to understand at what share price they're going to do the offering at, and then just observe it and see whether or not it sells off. And then that can be something that you may be able to start playing from a situational standpoint. So this is going to be the end of Market Mondays. Told me we're not going to really keep you here a long time. I want to ask you to look into our particular offer, which is the highest paid part-time job in the Royal Options training program. Somebody reached out to me and said, do I teach covered calls? This is a fundamental options course. We don't do the ancillary specific stuff. So I don't specifically teach spreads. I don't specifically teach covered calls because I believe that your issue without being successful in the market is a fundamental issue. It's not an issue of these ancillary things that a lot of people try to focus on. So one way in which I differentiate myself is I focus on the fundamentals. I focus on the ABCs because I believe that you're stronger in the ABCs is going to lead to success down the road, right? So I don't have this special thing that I focus on. I focus on the ABCs of the market. Therefore, we want to tell you to look at our particular offers. The July sale is over, but the course is still undervalued, underpriced based on the value that you can get it from. Or if you know somebody else that would be a good candidate, tell them to look into it. This is David W. Williams, also known as Diamond Dave, and I will talk to you later.